Well, it's the first trading day for the week, and let's just bring in DWTV Channels TV correspondent Javier Aguedas to tell us what's happening on the other side of the market. Hello, Javier. Yeah, well, it was a pretty good start for the Asian market today. How's the European markets doing this afternoon, particularly the DAX?
Well, investors are quite confused, actually, because on the one hand, we are supposed to see a recovery just like we saw it in the Asian markets or on Wall Street last week at the very end of the week. But on the other hand, that recovery is based on pure assumptions. People are assuming that the central banks of the world are going to continue to pour money into the economy to stabilize the economic development. People are also assuming that the oil price hit the bottom and is now starting to recover. So what we're seeing are very short-term reactions. This morning, when the trading session started, it seemed like the oil price was gaining strength, and that immediately translated into positive numbers here in the stock market in Frankfurt especially. Now that it seems like the oil price is turning around again, well, investors are selling again. So what we're seeing is a classic case of volatility where the main German index at least is very close to the zero value. That means that it is oscillating between positive and negative territory. We'll see how that trading session develops.
Now, investors have the Federal Reserve announcement and growth figures from the US and UK on their plate this week. What are they expecting?
Well, as for the general development of the economy in the UK and in the United States, we should see some positive developments in both. At least that's what would be widely expected. But the most interesting thing will be the reaction of the Federal Reserve. Let's not forget that they just rose the interest rates in December, and they're not really expected to continue rising the interest rates in the next future or in the immediate future. But here's the problem. The economy is developing well, but the stock markets haven't. As you know, we have had some strong losses in the stock markets, and even though it's not an official factor to make any decisions, it is true that the Federal Reserve, of course, is not going to intervene in a negative way, having a very sensitive state of the stock markets in the United States. So what is going to be very important and what people will be focusing on is how the Fed is reading the development of the economy and of the stock markets, and how and to what extent the fact that they rose the interest rates for the United States and therefore for the US dollar have impacted the economies in and out of the United States. So that's possibly what's going to be in the spotlight, and that's why, as always, whatever Janet Yellen, the chief of the Federal Reserve, says is going to be watched and listened to very closely.
Now, Saudi Aramco says it may open IPO to international investors. How are the European investors chewing this news?
Well, that is a very interesting case, actually, because we know that Saudi Arabia is a heavyweight in the oil export. And what investors are looking at in this case is the two sides of the story. Because on the one hand, it is, of course, a very good opportunity for investment. It is a very good opportunity for business, because we know that oil in general and oil export, especially from Saudi Arabia, should be profitable. On the other hand, you do have to wonder why Saudi Arabia is doing this in the first place. And that is something that is actually criteria for concern. Why? Because we know that Saudi Arabia is struggling with the low oil prices, and that is just a resource to get capital into the country. We know that the economy has been suffering. We know that the public finances are not necessarily working that well. So the reason for this step is a reason for concern, especially since Saudi Arabia, having so much power in the oil price and in the oil markets, probably knows that the oil price is not going to develop very positively in the near future. And that is why you have to take a look at it in both ways. On the one hand, opportunity for investment. On the other hand, a bad sign for what's coming for the oil markets and for the oil price.
Right, Javier, thank you for your time. Javier Aguedas, DWTV Channels TV correspondent, reporting from the Frankfurt Stock Exchange. Well, Inequality and underdevelopment were the key things identified at the just concluded World Economic Forum as factors slowing global growth and fueling insecurity and conflict. Now, Africa Health, Human and Social Development Information, that's Development, has warned that 10 of the 20 countries at the bottom of the Global Human Development Index are members of the 15-country ECOWAS sub-region, and so the group believes that inequality and underdevelopment are concentrated in West Africa. Now, let's find out more about this from the editor, Africa Health, Human and Social Development, Mr. Rotimi Sankore. Thank you very much for joining me, Mr. Sankore.
Hi, Chimazia.
Now, talking about inequality, by the way, why do you think that inequality and underdevelopment are concentrated more in ECOWAS countries?
Well, it's not so much what I think, it's what the facts are. It's what the data and the statistics are underlining. If you look at the data, you will see that education, for instance, which is one of the key factors in inequality, is lowest across West Africa. And this translates automatically into income inequality. It also translates into unrest, and unrest then translates into insecurity, especially if you look at the peculiarity of West Africa. We have arguably the fastest growing population in the world. Nigeria, for instance, is going to add about 80 million to its population in the next 15 years of the SDGs. That's the current population of Germany. Niger, which is just across the border, will double in population from 17 million to about 34 million. Now, when you have such a young and fast-growing population, and your investment in education and jobs is not matching the population growth, what you see is a translation into inequality. And a huge chunk of that is also gender inequality. Because even though we have a huge percentage of men not educated, not in school, we also have a bigger percentage of women. And that means there's no family planning, and they're having more children, 6, 7, 8 children, and the cycle just goes on like that. But very importantly, what the World Economic Forum was underlining is that where you have this kind of circumstances, it means that extremists then have access to a large pool of alienated youth. And as you can see, the attacks in Mali, in Burkina Faso, earlier in Nigeria, which we predict will spread to Niger and other places like that, it then affects investment because investors don't want to invest. It then deepens the inequality because there are no jobs.
Right. Now, looking at the data from the Global Human Development, the index, looking at the index, we have countries such as Germany, Netherlands, Denmark at the top. And would that explain what we are seeing right now, having migrants into some of those countries?
Oh, yes, most definitely. Migrants or refugees that are living countries in conflict, or just economic migrants, will go where the jobs are. And if you remember, Chancellor Merkel in Germany, at the beginning of the wave of refugees and migrants, said Germany could welcome about 1 million of them without any problem, because she and her team anticipates that these people will help fill the job gaps that currently exist in Germany. So most definitely, that's a very important reason why it's happening. But might I just point out something else? The key theme, aside from inequality at the World Economic Forum, is the fourth industrial revolution, which essentially underlines the rise in robotics and automation in manufacturing. Now, these are high-skilled jobs. This is one of the reasons why China is one of the fastest growing economies in the world. All our smartphones, televisions, and things are now made in China because of the quality of the technical education. Now, if you reverse that and look at places like West Africa, where we are not just talking of low quality technical education. We are talking of very low basic education. It means that when the fourth industrial revolution kicks in, all the low skilled jobs on our factory floors will disappear.
So like robots is going to take over the jobs. And now we have unemployment issues. Now, going by what you have said, and of course the warning coming out from the just concluded World Economic Forum as regards robotic economy, right? What can African countries actually do to really get out of this?
Well, the main thing is to scale up education, and not just education, but technical science and technical education. The president of the Africa Development Bank, Akin Adesina, who incidentally is from Nigeria, underlined that by 2050, only 6% of Africans are projected to have higher education. 6%. And what he didn't say is that 6% is 6% of 2.3 billion, because Africa's population will double between now and 2050. So that puts us in a very tight space. So huge investments in not just basic education, but in science and technical education. That's the only thing that's going to save both Nigeria and the ECOWAS region.
All right. Thank you very much, Mr. Sankore.
Thank you, Chimeze.
Right, I've been speaking with Mr. Rotimi Sankore. He is the editor, African Development Information. And that's it on today's program. Thank you very much for watching. I'm Chimeze Obi. Welcome.